Morning everyone, and welcome to today's trading analysis on the 29th of July. And with the Fed raising rates by 75 basis points and the GDP numbers lower than expected, let's see what the markets are doing. Let's see where we are. Jumping right into the Bitcoin chart on the weekly scale, you can see that it is still quite bullish, coming down from this low at $20,000. It's now sort of reaching $24,000. That's almost 20% up already. You can see it's still heading for the 21 moving average. With the RSI moving up, the momentum is certainly on Bitcoin side on the weekly scale. On the daily scale, you can see that it has broken out of this channel, came back to retest it. At this point, when it broke below, I was actually getting quite bearish because it went back into the channel and I was expecting further downside. But be it as it may, on Wednesday, when the Fed somehow mentioned it 75 basis points, the market saw that as a bullish move. I'm not quite sure exactly why that is bullish, because 75 basis points is a massive rate hike. So here we are now looking at Bitcoin sort of reaching the previous high. If it had to break through 24,274, that certainly would make a higher high, and a case would be made up for a run up to $28,000. As for the funding rate, you can see that the longs are still paying the shorts. And what that means is that there are still more people long in the market than they are short at this stage. So looking at that, I think a case for further downside is still on the cards when you're looking at the funding rate. XRP has got exactly the same situation as Bitcoin, with the green 3 about to go above the green 2 is certainly a longer term bullish signal, and probably give us a 3 or 4 weeks of upside, probably heading towards the 21 moving average as well. On the daily scale, exactly the same, but if you look at it, it's making slightly higher lows on the bottom with hitting the same top, so sort of an ascending type of triangle, and the upside target for that certainly would be in this area up to 50 cents. So just have a look at that. The S&P is at the 21 moving average right now, so this will be crucial today to see how the S&P reacts. This is exactly, I can almost say, to the cent what the prediction was. So rejection here and then further downside would actually be going according to plan. But what I've noticed, no market ever moves according to my plan. The US dollar, the Dixie, is moving downwards and is about to hit the first support. So we'll have to see how that reacts there. If this does turn around here, you will see that there was a bullish divergence forming and then a further upside on the US dollar. All in all, the environment is still negative, especially with the Fed raising rates like it does. It does mean that there's more and more pressure coming onto the market. I don't know why the market has reacted so positively to the rate hikes, but it has. Just be careful, because downside could be quite ferocious again when it does happen. If you like this content, please like and subscribe, and let's see you on the next one.